really seemed like the shares were trading off of the first quarter subscriber guidance, which came in a bit light. Are you worried at all now that further competition is slowing down growth for Netflix?
No, not at all. Netflix is pretty, they're pretty strong in the developed markets already, so there's not a whole lot of growth specifically for them in the US. Looking abroad, they have a lot of room to grow, but that growth is going to be difficult. When you talk about that 7 million subscriber guidance, it's actually compared to pretty strong Q1 in 2019. So when you look at the year-over-year comparisons, it's a very strong or weak comparison compared to last year.
Andre, let me get your thoughts on this, because typically they've been a little bit conservative when they forecast some of their guidance. Do you feel Netflix is being conservative, or is there a real potential slowdown underway?
I've long said, I think, probably almost a year now, that the real competition for Netflix really starts in 2020. And I still believe that to be so. And so if I were them, I also would be conservative, because I do think that it's going to be difficult to tell what the full impact of all these other new solutions will truly be on Netflix in the first quarter. And second quarter, probably even more so than Q1.
Eric, I want to come quickly, I'm doing this in real time, and take a look at a chart here that I'm showing inside my terminal, because you mentioned how the U.S. domestic market is a very mature market. And you can see, of course, in the fourth quarter, it was that U.S. market that has struggled. Is that normal, like you said, given it's a mature market, or would you like to see more U.S. subscribers really coming online?
Well, again, subscriber growth in the U.S. is going to be lumpy moving forward. And that's largely because they're already reaching well over 50% of all U.S. households. Now, there is more growth for them, but when you consider that more people watch Netflix than actually subscribe because of, obviously household sharing, but also password sharing with people outside their household, there's not a whole lot of room for them to grow anymore within the U.S. in terms of subscribers. But they still offer a great value to consumers, and they can continue to raise prices moving forward.
Andre, I want to get your thoughts a little bit more on that competition that you were talking about. I so often hear that domestic user is a much more valuable customer because they're more profitable. I know that the growth is internationally because it's less of a mature market, but that customer over there isn't as profitable. It's not as valuable. How do you view the mix between both domestic subscribers and the international subscribers as well?
Yeah, so I think the domestic subscriber is actually much more important in terms of, especially over the next year. And I would disagree with what the common thought is from a lot, that Netflix can increase revenue by just increasing the price. Netflix is now actually priced at a premium compared to their competitors, with Comcast announcing Peacock having a free tier, with the Disney Plus coming in at a cheaper price, and there's Pluto TV and others that are now free streaming online. So the real challenge for Netflix is going to be, I don't even think it's going to be client growth. I think retention of clients is going to be much more of a difficult thing domestically than I think people are giving it credit for, because there's so much more free solutions that are coming on and cheaper price solutions. More content is being pulled from Netflix, and I just don't think they can spend their way out of it like they have in the past.
So, Andre, I want to get additional thoughts from you, because Netflix itself did come out and say that customers are leaving due to recent price increases. What level of churn and price increases are you really comfortable with?
It's difficult to say what the level of churn is. I can say that I'm not comfortable with any additional price increase from Netflix. I just don't think it's feasible. So what Netflix benefited from tremendously was first mover advantage. If you think about it, 2 years ago, having a Netflix, if you had connected TV or any sort of streaming device, was almost like a utility. It was pointless to have these devices if you didn't have Netflix a few years ago. Now you have people that you don't need Netflix. A lot of the most popular content from that is licensed is coming back to the original owners or going to other platforms. There's half a dozen cheaper options that have significant content. There's solutions like Pluto TV and Zumo and then Peacock that are 100% free that still have a lot of content, IMDb TV from Amazon. And so I just don't think it's realistic for Netflix to increase prices even a penny. I would argue that to have success in 2020, they're really going to have to diversify their business model and have a cheaper ad-supported tier, or make some acquisitions or do something.